If you're thinking about buying rental properties this year, you need to stop and watch this video first, because if you're trying to run the same playbook from COVID or the Great Recession or what you read in Rich Dad, Poor Dad from 30 years ago, it doesn't work. Prices are at all-time highs. Interest rates haven't come down. Regulation is changing all of these rental games. Tenant behavior is different. You got hedge funds. There's so many factors right now that are changing the game, but I'm gonna help walk you through to figure out what is best for you. If you're wondering why you should even listen to me, my name is Ryan Pineda. I have bought and sold over $100 million worth of real estate. I've done a ton of house flips. I've done a ton of wholesales. I bought Airbnbs back in 2017, way before they were cool. We've bought land. I have bought hundreds of apartment units in my fund. And so when I talk about real estate, it's because I've done almost everything you can imagine in real estate. And I want to just tell you transparently everything you need to know about buying a rental property this year before you go ahead and make a mistake thinking that what you heard 5 years ago still works. Now, the first thing you got to think about when it comes to rental properties is, what is your goal? And really, there are two schools of thought when it comes to rentals. The first is you're going to buy rentals for cash flow. The second is that you're going to buy rentals for appreciation. If you take a major metro like Las Vegas, where I'm at right now, the average price of a home is almost $500,000. And if you're going to go just do the typical rental model, which I'm not saying you have to, but let's just use easy numbers here, you're going to go put 20% down. So you're going to get a loan for $400,000. Now, if your interest rate is 7%, after your taxes, insurance, and all of those things, your mortgage payment might be around $3,000. And that same house right now might only rent for about $3,000 max. In fact, there are many $500,000 homes renting for like $2,500. And so even if it broke even at $3,000 rent and $3,000 mortgage, you're actually going to lose a whole bunch of money because you've got vacancy, you got property management expenses, you've got repairs, you've got CapEx. There's a whole bunch of things that are going to make this thing lose a lot of money every single month. And so when you really look at it right now today, it's like, man, I'm going to put $100,000 down to literally lose money on this home right now. So the appreciation markets are really, really difficult. And I mean, this wasn't always the case. I mean, when we had low interest rates, we're talking 2 to 3% loans and prices were lower, it actually made a lot of sense here in Vegas. You could have bought homes for, $400,000. Your rate's really low. They might have broken even on cash flow, which I was buying rentals back then. Like, I was okay breaking even and not making any cash flow because I was always banking on appreciation. And I was always, when it came to rental properties, an appreciation investor. I wasn't really super concerned about cash flow because in the end, to me, appreciation is what builds real wealth at the end of the day. It's not the $200 a month that comes from a rental property. It's from the appreciation this asset gains over the next decade or 2 decades or whatever the case is. But now the game is so different because those appreciation markets aren't breaking even in most cases. They're actually losing money. So if you can't invest in an appreciation market, then I guess you got to go to a cash flow market, right? And this now takes you to pretty much like the Midwest. There's still properties in the Midwest that are $100,000, $200,000. And, you might be able to find what's called the 1% rule, where a $200,000 property will rent for $2,000. And depending on how much you put down, your mortgage might only end up being $1,200 a month. And so, you've got a decent enough spread in between there, even once you factor in property management, repairs, vacancy, and all of that. But even still, right, that property nets you $200 a month. And you got to really look at it and say, okay, if that's what I'm getting on this property and I'm going to go put, say, $40,000 down, I mean, that's just not a good return on my cash flow wise. The cash on cash return of that investment would be about 6%, right? Because you're putting $40,000 down. That property might make you $2,400 a year. That's 6%. Not a very good investment if cash flow is the actual goal, because remember, we're going into a market that we don't think is going to have major appreciation like these major metros have had, like in Vegas or California or Texas or any of these other places that have seen way bigger growth over the last decade. So if that's the case and neither option looks super appealing right now due to prices and rates, then what do you do if you're going to buy a rental property to make cash flow and build wealth and everything else? Well, I think it leaves you a few options. Option number one is you do some kind of alternative rental strategy. So I bucket all these different creative ways to try and make more rent into this bucket. So that could be Airbnb. That could be Section 8. It could be insurance rentals, assisted living, co-living, rent by the room, college rentals. The list goes on and on. There's lots of alternative rental situations that can increase the rent so that you actually get cash flow. But here's my big argument with most of them. At that point, you're essentially running a business. So if you're going to go do Airbnb, guess what? You're running a hotel. This ain't some passive thing. And if you want to go pay a property manager to go run your Airbnbs for you, good luck. They're going to go take 20%. I've even seen some take 30%. And that's pretty much going to be all of your cash flow. So now you still don't make cash flow, but now you have way more people using the property and it's going to get beat up way more. So if you're going to try and do one of these, in most cases, you're going to have to go build it out yourself in-house to really earn that spread. In addition to this, if you want to go do things like assisted living, there's lots of licensing and different permits and things required to go do it. Airbnb also has licensing and permits and everything else. And a lot of cities are banning Airbnb. I mean, here in particular in Las Vegas, it's almost impossible to get an Airbnb license because guess what? These hotels want you staying on the strip. So my point is, it's not impossible to get cash flow if you go these strategies, but just realize you are now starting a business. Which leads me to my second point of, well, what other business opportunities are there if I'm going to commit to starting a business at this point? And I would argue the other options are far better than trying to make this rental make sense some way, somehow. For example, I've had franchise owners on my podcast, and it's like, yeah, you could go start up a franchise for, in a lot of cases, it will take six figures, but the upside of those franchise and running those businesses is significantly higher than an Airbnb. I've had people like Cody Sanchez on my podcast talking about buying businesses and, running laundromats and things like that. And it's like you look at the upside of those and they're significantly higher. And not only that, but the business itself has value outside of the real estate relative to the value of these other kinds of businesses, which you could actually sell. But the thing I've been really stressing lately, having been in this industry now for over 15 years, is this. Most people who are telling you to buy rentals for cash flow did it at a time when it was advantageous to buy the rental for cash flow. I've got friends who bought a ton of properties in 2010 here in Vegas where the average price was $100,000. They're like, well, yeah, Ryan, look, if you just do what I did, you buy real estate and wait, then, you're going to become wealthy one day. And it's like, no. There's a big difference between when you bought versus somebody buying that first property today. The difference is it made financial sense when you bought that first property. The house in Vegas that was $100,000, your mortgage would have been $600 and it was renting for $1,200. So it made perfect sense. You're not going to lose money on the rent. You're actually going to cash flow and it's awesome. I agree. Go buy that deal. But that same exact house that is $100,000 back then is now $500,000 today. And as I explained before, that same exact house is going to lose money every single month. And I don't think anyone buying their first property should lose money every single month. That is a recipe for disaster. So no, I disagree with people who have that mindset because they can't see beyond what they did in that era and that situation. It is not the same. The same exact house is going to lose you money today than it would have had you bought it 15 years ago. So you can't take the same approach, which is why we have all these alternative strategies now, just trying to figure out how to make it work. But to even just bring all this back, for me, what I've been really just preaching and pushing for the last year is that I actually think if you're going to just go start a business and you want to be in real estate, you really should just start a wholesale business. When you really just think about the cash flow and the money invested and the risk, it's like, okay, well, if I'm going to go get a rental property that has a mortgage for $3,000 a month, and my upside is I might make a couple $100 a month if I'm lucky. I've got this risk now of $3,000 a month on a 30-year mortgage that I can't really get out of unless I sell the property. If it doesn't have a tenant or something breaks, I got to have to still pay that $3,000. I'm going to have to pay that repair. There's significant amounts of risk with owning a rental property. On the other hand, if I wholesale, let's just say I take that same $3,000 a month and I put it towards marketing and building my business and softwares and everything else. I can absolutely go ahead and go get deals that could make me $15,000, $20,000, $30,000. My upside is significantly more from a cash flow perspective. And on top of that, I'm not tied into debt. So if something goes wrong, I can just stop marketing. I can turn that business off. no harm, no foul. Now, people always say, well, Ryan, you're not building long-term wealth and building assets. And I always say, no, you actually are, because number one, you're actually making cash flow and active income now. And the only way to actually build wealth is to make active income first and then reinvest that money into long-term assets. And you know what produces a lot of long-term asset opportunities? A wholesale business. Because now you're a professional deal getter and you're somebody who is getting deals. You're seeing deals every day. You're talking to sellers every day. And instead of wholesaling this one deal, all of a sudden you just decide to keep it. You keep it as a rental. You hold it long term. You know it's a good deal. You're going to go get your tax write-offs. You're going to go get your depreciation. And now you have the best of both worlds. You're making cash flow from your wholesale business, and that wholesale business is producing the deals that you want to get and cherry pick and keep as rentals. And now you're getting your tax write-off and building long-term wealth and getting appreciation and all those amazing things. So that's what I currently do. That's what I'm having all of our students doing. And if you want to learn more about it, you can go to wealthyinvestor.com. We'll teach you how to do it. We provide leads, software, coaching, mentorship, all that good stuff, right? But that is my philosophy at this point. It's like, man, if I build a wholesale business, that is the first half of any kind of real estate business anyways. Like if I'm going to flip a house, buy a rental or wholesale, I still have to find deals. That's all a wholesale business is. It's just that instead of keeping the deal, you decide to sell the deal to somebody else. You sell the contract and you make a fee now. And I'll tell you this, these $15,000 fees that we make, I don't have any rentals that pay me $15,000, right? We do 6 figures plus a month in wholesale fees every single month. We can do that a lot more scalable, a lot quicker, and with significantly less risk than a rental portfolio. It's really hard to go make 6 figures in rental cash flow. But regardless of that, my whole point is just posing the question that, look, if you're going to think about doing cash flow this way with all these different rental strategies, also consider these other things because they're both businesses. They both are going to take your time. They're both going to take your effort. So you really got to consider both of them. Don't just like have this boxed point of view about how things should be. That's all I'm saying. Now I'm going to keep on going. Now let's assume that you say, look, Ryan, I'm going to keep doing rentals. Look, I'm going to do Airbnb. I'm going to go to a cash flow market, or you know what? I'm just really good at finding deals. So my deals do cash flow. Awesome. Well, the next thing you got to figure out is, hey, what is my strategy for finding deals, right? If you don't know how to find deals, how do you find them? Well, there are really 3 ways that you can find deals that you want to buy as rentals. Number 1, you can go look on the MLS or Zillow, right? That's the public market. You can browse and just figure out what you want. That's the first way. The second way is you can go network with realtors and wholesalers. So you can go try to get access to deal flow. So as I said before, like I think a lot of people should wholesale. These guys who want to buy rentals, I love these people because they pay the most for deals. They pay more than flippers. And so I wholesale a lot of deals to people who want to own rentals. I think it's great. So, you can network with other realtors and wholesalers. So the third is you can start marketing directly to sellers. And this goes back to kind of what I'm saying too, is that if you learn how to market directly to sellers, you cut out all the middleman, you're going to get the best deals, and then you have choices. You can keep them all for yourself as rentals. You could flip some of them. You could wholesale some of them, right? Becoming great at marketing, especially direct to seller, just makes you a great investor overall. And so like for us, once again, that's what we do. Like we market to sellers directly all across the country. Some of them I wholesale, some of them I keep as rentals, some of them I flip. Like you have all the control when you have the contracts and you're going direct. So my advice is based on your time commitment to this business, choose which one you want to do. If you don't have a lot of time, you don't want to talk to sellers directly, you just want deals to come to you, then look on Zillow, look on the MLS. If you don't want to do that and you like networking with people, then go to local real estate meetups. Try and meet wholesalers. Try and meet realtors. Join groups, join Facebook groups, all that good stuff. But if you want to get really good and get the best deals, well, the best deals are always going to come from being direct to seller. And so, that's what we teach at Wealthy Investor. Obviously, we have a massive community too. So if you join the community, then you'll by default get networking deals, get wholesalers wanting to send you deals, right? Like that's a whole nother thing I tell people. It's like, look, if we have 3,000 people in our community who are all wholesaling and trying to find deals, they need end buyers. And so it could be a great way for you to get deals from a community of people trying to wholesale and flip. Now, once you've got a source for your deals and everything else, the next question you got to ask yourself is, well, how are we going to finance these deals? Now, there's a lot of ways to finance your deals, right? I mean, if you have all cash, I mean, you could buy rentals all cash, and then you're for sure going to cash flow, right? Because you don't have any debt on the property. So, I mean, that is an option for those who have it, but everybody only has a certain amount of cash, so that's always going to be limited. Option number 2 is you get a loan. And, one of the best strategies that's been around for a really long time is the BRRRR strategy. My friend Brandon Turner, who's spoken at our events and everything else, kind of coined the term many, many years ago. But that's buy, renovate, rent, refinance, and repeat. Really, the key to a BRRRR is getting a property all in at 80% or less. So, these homes in Las Vegas that are $500,000, if I can get one all in at $400,000, technically, I could do a BRRRR and, buy this house. They're going to give me a loan up to $400,000. I can refinance it. And then now I basically have no money into the deal. That's the concept of a BRRRR. But there's one hiccup with BRRRRs right now, and that is that they don't cash flow. So that same house I told you in Vegas, it used to cash flow, and the bank would have no problem because they could see that the rent exceeds the mortgage. But now, you might run into some issues with banks where they're looking at the ratios and they're saying, well, wait a minute. You're not going to make as much on this rent than what we're charging you for the mortgage. So we need you to get your debt load down, right? We're not going to lend as much on this deal because you're going to lose monthly cash flow. So you could see that happen, which then says, oh man, well now we got to be all in at 70% or 60% in order to get the loan. And this is especially true if you get what's called a DSCR loan. This is a debt service coverage ratio loan. They look at that specifically. And so either way, right, this is one of the hard things, again, with rental properties. And then the other part, I would back to arguing the other side, okay? I don't know if you guys know, watching this video, you were going to see a whole other side of this argument. You thought you were just going to get a how-to of rentals, but I just want to give you the big picture. If you did get this house all in for $400K, and it's worth $500K, and it's not going to cash flow, technically you could sell it right now, and you've got $100,000 of spread. Now, you'll have other expenses with realtors and selling it and everything else, but you could net probably $60,000, $70,000 when it's all said and done, right? So, you want 60 grand in your pocket today or negative cash flow for however many months until rents finally go up. So that, even for me, if I'm looking at that deal here in Las Vegas, in almost 9 out of 10 cases, I'm going to flip the house because I'd rather take $60K today than negative cash flow for who knows how long. Which leads me to a whole nother argument about how you could actually cash flow today, which is through creative finance. I think right now the stat is at least half of the homes in America have a 3% mortgage or under. And so when you look at that, most of these houses would actually cash flow at those interest rates. But, how do you get those houses? Well, you can do creative finance. You can do things like subject to. And I'm not doing a full training on creative finance in this video, but here's my point. If somebody has a mortgage on a property and it's, let's just say $1,500, and the property right now would rent for $2,500, $3,000. Well, clearly this is like, an amazing opportunity. Where do you find these? Well, you're not going to find them on the MLS. And a lot of times you don't really find them from wholesalers. You're going to find them by going direct to the seller, right? I've done many subject to deals. I've done many creative finance deals, and they've always been direct to the seller because we're able to negotiate with them and say, hey, what if we kept your loan in place? You got a really low interest rate. If you let us keep your loan in place, we can pay you more for the property. This is usually how these deals happen. Or these people are in foreclosure and they're going to lose that loan regardless. And so, we'll pay them to take it over and catch it up and get it current and everything else, put some money in their pocket. And so it works out really good. But kind of my point with this is, in order for you to even really do subject to at a high level, you're usually going to have to go direct to the seller to go find these loans. And the cool thing is, at Wealthy Investor, we have a software called Wealthy Deals. And we can search all across the country any property that has any kind of interest rate that we're looking for. So if we're looking for rates in the 2s, we could just go set a filter and say, hey, we want to search, properties that have a sub 3% interest rate. and it'll give me every property in any city. And I can go cold call those sellers. I can go get their phone numbers and hit them up and see if I can go pitch them to do a subject to deal. Kind of goes back to wholesaling, right? If you learn how to go direct to seller, you have the ability to do these types of things where I can go try and push for a subject to for my rental portfolio that actually cash flows. So, it's really important to get good at these things, because this is how you make money. And this is how you can go take advantage of opportunity that doesn't exist to most people. Assuming you can now finance these properties, the next thing I want to lead you with is, the long-term impact and the tax impact. I'm not anti-rental by any means. I hope by this video, you see that I'm not anti-rental. People say that. And I'm like, dude, I'm just giving you the perspective of everything about rentals and real estate. I'm a guy who's done them all. I'm just telling you what I've seen, having experienced all these things. But, the biggest thing that I would say most rich people buy rentals for are the taxes and the appreciation. So even though you might not be getting cash flow today on the property, you technically do get cash flow if you get a big tax saving. So in a cost segregation study, what can happen is, so to take a step back, there's something called depreciation in real estate. The IRS allows you to write off certain things in a home that they know are going to deteriorate over time. And typically what they do is they let you take the building value of the home and divide it by 27 and a half years. So for easy math, if the building value, meaning what the building's actually worth, you would take out the land value. If the building value is $275,000, you would divide that by 27 and a half. Don't ask me why that's the number. I don't know, but it is. And then you're able to take that number, which is $10,000, and claim that write-off every single year. So this is a $10,000 a year write-off, right? But if you do something called a cost segregation study, it basically allows you to take a bigger depreciation expense in year one. And a typical study might get you a 25% or 30% write-off. So in the same scenario, let's just say it's 30%, and you were at $275,000. Well, now all of a sudden I can take a write-off for almost $80,000 instead of $10,000. And so if I get an $80,000 write-off today and I'm in the 40% tax bracket, well, all of a sudden that saves me $32,000 that I would have paid in taxes this year. And if you break that down over 12 months, that's almost $2,700 a month. So even though the property might not cash flow, let's just say it breaks even, I would be saving $2,700 a month that I would have otherwise paid the government in taxes. And so in the end, to me, that really is $2,700 in cash flow, because it's cash I would have lost if I did not buy the property. So this is why a lot of wealthy people buy rental properties. It's not necessarily the $200 a month that it's making. It is the $2,700 a month that it's saving. And it is the hundreds of thousands that it's going to appreciate over time. This is the big picture of rental properties. I think we've gotten to this myth over the last decade that rental properties' core purpose was cash flow. And that's not really the case these days. You got to put a lot of money down to see any type of cash flow. And the more cash you put down means the lower the cash on cash return is. And so rentals are kind of going back to what the core purpose is, which is taxes and appreciation. Then obviously you'll get principal pay down as well, while the tenant pays it down. But, this idea that the cash flow that you get from it, that's actually the least important thing. And I've been saying that here on this channel for at least 5 years, way before rates even got to this point. Even when rates were 3%, I was saying that. And now it's even more true today. And my biggest advice to anyone here who is contemplating buying a rental right now in this environment is this. If you're going to have to build a business around this property to make it cash flow at all, at least look at the alternatives that you could be doing as a business. My alternative that I really push is wholesaling, because there's not many things you could go start from your house virtually on your phone, anywhere in the country. And, one deal can make you 15 grand. I mean, that's the average deal size across the country. Do I want to get one deal a month? Which, by the way, if you're doing the right things, isn't that crazy. That can make me 15 grand. Or how many rentals do I got to get to achieve 15 grand? I mean, even in the alternative rental side, you still need a significant amount of rentals and debt and everything else to achieve the same result you could with wholesaling, which also has way less risk and which also leads to the deal flow of rentals that you could eventually get. So for me, I always just am like, look, you're just starting out on this. You want to make cash flow? Let's go wholesale. Let's go do it. We'll give you all the systems. We'll give you leads. We'll give you softwares. We'll train you up. Let's do it that way. So for any of you guys who want to do that, wealthyinvestor.com. We also teach people how to flip. Obviously, we still teach rentals because a lot of our students are building rental portfolios, but they're doing it because they have a flow of deals constantly going through. And so we'd love to help you out with that, but hopefully this video was helpful in helping you see the other side of rental properties. Take care.